Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of May 4th, 2015. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was not kind to Maryland mortgage rates. Take a look at the bond chart on the screen. You can see that big blue arrow down. That means mortgage bonds broke out of that sideways trading trend we had for a while, and they broke out the wrong way. They broke out lower. They sold off, moved interest rates higher. And then you see that big red candle on Friday. That's a bad sign. Bonds sold off again on Friday as the stock market rallied. So with the short-term trend now being for mortgage bonds to sell off, short-term, we're going to recommend locking your Maryland mortgage rate to start the week. Lock in, because we could see the bond sell off even more. If anything changes, we'll definitely let you know. Now, if we dig into the reports, the big economic report last week was the first reading of GDP for the first quarter of 2015. It was a stinker. It came out at 0.2%, well below expectations, and a big drop from 2.2% from the last quarter of 2014. If we look into that report, all sectors of the GDP report were weak. Consumer spending dropped from 4.4% in 2014, fourth quarter, down to 1.9%. Remember, consumer spending is a big driver of the economy. So, bad report on the economy. And then a huge thing in the report was investment in mining, exploration, shafts and wells, all that stuff, energy related, dropped 48%. So with the price of oil staying low, that's hurting the economy in terms of all the energy sector drops, money being spent on energy exploration, all that kind of stuff. So we'll have to see how that plays out. And then weekly initial jobless claims, contrasting the GDP report, jobless claims came out at a reading which was a 15-year low at 262,000 claims. That was a drop of 34,000 claims from the previous week. So that was showing a good sign for the labor market. But the gross domestic product, which is showing the health of the economy, not good. So we'll have to see how those two play out in the future. And then the Fed's favorite measure of inflation was the PCE, which is a personal consumption expenditure. That came out very tepid, only 0.2% increase in the previous month, 1.3% year over year. Well below the Fed's target market of 2%. So with that in mind, the Fed being data-driven, we don't see them raising short-term interest rates in June, as been hinted previously. And they may not even do it this year unless the data turns around. And then in housing news, the Shiller 20-city home price index was released for February 2015. It was up 5% year over year from February of 2014, and it rose 0.5% from January. So that shows the housing market still doing very good, still a great time to buy. And then the next housing report we saw was pending home sales for March 2015. They were up 1.1% from February, and up 11.1% year over year from March 2014. That's huge. Now remember, pending home sales is the number of contracts on existing homes that are for sale. So that's great news in the housing market. It's showing the housing market is definitely rebounding as we come into the spring, summer months. If you're looking to buy, now's the time to buy. If you wait, home prices are going to keep appreciating because we have low inventory. So get out there and buy. Now in the local news, USDA Rural Housing Program is working on files submitted April 23rd as of Friday, May 1st. So I would plan on adding about 2 weeks to the end of your closing date when you're planning a USDA loan. And then in the local news, we've got the next free first-time homebuyer seminar Wednesday, March 13th in Laurel, Maryland from 6 p.m. to 8 p.m. at the North Laurel Community Center. And then the next one in Towson is May 16th, that's a Saturday, at the Baltimore Sheraton North Hotel, right on Delaney Road, from 10 a.m. to noon. You can register for either one of those events, but give us a call, 410-412-3319, or online, www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.